Welcome back to Author's Note. While Europe has suffered from a sovereign debt crisis over the last few years, Africa may be on the cusp of something of a sovereign debt rush. There have been several pieces of good news this year. Nigeria and South Africa have seen borrowing costs fall as their debt has been included in widely tracked bond indices. And other countries are finding investors willing to buy their debt issued in foreign currency. Zambia's dollar-denominated bond issue in September has been followed by Zimbabwe's admittedly smaller issue last month. And this is the first time the country has issued foreign debt since its economic collapse and the dollarisation of the currency. And then just last week, Namibia achieved a debt first, a rand-denominated issue. So where do we go from here? Well, to look at African debt, I'm joined by Eleanor Whitehead of This is Africa, an FT sister publication. Eleanor, welcome.
Hi, Rob.
Africa's come a long way in a decade. Our first chart, I think, will show that. Yep. So let's have a look now. What does this tell us? Obviously, this is Africa here, and it's a regional comparison with Asia and Pacific and Latin America.
Mm-hmm. So really this is showing us, Rob, Africa's ability to access international capital markets. And what we can see in nominal terms is just how low Africa's debt security stocks are. In 2011, you're looking at something around the mark of 70 billion. Now that's relative to well over 500 billion in both the case of Asia Pacific and Latin America there. So in nominal terms, very, very low still. We're clearly starting from a low base. In terms of increases, you can see that increase has been fast in the decade to 2011.
Nearly quadrupled, 290%.
Quadrupled, yeah, yes. Absolutely. So far faster than Latin America's increase, say. So that points to some of the growth potential in terms of accessing those international markets. However, slightly less rosy picture if you look down at the debt security to GDP ratios, which haven't really changed considerably, staying below 4%. Up to 2011, and actually Moody's points out that if you take South Africa out of the picture, of course the continent's biggest economy, you're looking at something much closer to a 1% debt security to GDP ratio.
So what's the investor appetite like at the moment for African debt? What are borrowing costs like?
Zambia is the perfect example. The issuance this year, 15 times or more oversubscribed, raising 750 million. And those borrowing costs went in tighter than Spain. So that's reflecting investor appetite, confidence in the Africa growth story as well. And of course, we're looking at these broader trends of the search for the next frontier, for the next BRIC economy. And in Africa, you've got an economy worth about 1.7 trillion, which is tantamount to about India or to Russia's.
This shows that Africa, although it may have a small amount of bond issuance, this is obviously compares it splits the debt by region. You can see in Africa here, there's an awful lot of multilateral and bilateral financing. So Africa isn't under-financed necessarily.
No.
But how should this be changing, do we think?
Yeah, right. So as you point out, what we can see is the overarching predominance of that multilateral, so your IFIs, the World Bank, and the bilateral.
African Development Bank.
Yeah, exactly. Yep. And the single partner finances. And this has been an easy, cheap, long-term access to capital for these countries, and you can see that relatively bonds rate very lowly, so accounting for about 10% of those debt stocks in total. That's going to change. I mean, we've talked about that growing investor appetite.
So this profile should look something a bit more akin to perhaps Middle East or Latin America, and maybe
we can see that these other regions have tended to prefer bonds because what that gives them access to is long-term debt, but without any conditions as a tendency. So regions do at a later point tend to prefer that as a access to financing.
Let's skip to the end. I'm going to put you on the spot. Which country? Namibia obviously has recently issued this rand-denominated debt. Which other countries are potentially lined up for maybe a Eurobond issue, do you think?
Well, Moody's have flagged up in Southern Africa, Angola and Mozambique, and then the East African region has really been dominating in their foresight. So that's Tanzania, Kenya, and then inland to Rwanda and Uganda. I think an interesting one to watch would be Angola. We've monitored quite a lot the sovereign wealth story. Angola, of course, launching its sovereign wealth fund just in the last couple of months, 5 billion to safeguard its resource assets. Of course, now when a country does that, it's going to affect its credit rating. Nigeria just received a first-time rating from Moody's and actually was rated 3 notches below investment grade, and part of the reasoning for that Moody's gave was based on the launch of its sovereign wealth fund. So it would definitely be interesting to see how the launch of Angola's sovereign wealth fund would affect their borrowing costs were they to issue next year. So.
Great. Well, Eleanor, thank you very much.
Thank you, Rob.
So an interesting point there. With the establishment of increased sovereign wealth in Africa, there is also an increase in sovereign debt.